Hello and welcome to this week's Australian Stock Market Report. This week we'll look at whether China is a big investor in Australia and if we should be concerned about the current war of words and sanctions. Then we'll get into the Australian stock market so I can share with you my thoughts, where it's heading, along with answering all your questions and looking at stocks for you. Hello, I'm Dale Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Now, before we move on, thank you for showing your support for our channel and hitting that subscribe button. Now remember, as you subscribe, click the bell on the right of it so you keep up to date with our latest videos. Also, remember to tune into our live Australian stock market show every Tuesday, 7 to 8 p.m. Australian Eastern Time, because this is the show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your most burning questions. Now, the war of words and sanctions from China has escalated over the past few weeks, and this is causing concerns not only for industry in Australia, but also for all of Australians. There is a consensus from the public that China is buying up Australia. So what are the facts? Now, according to the Department of Foreign Affairs and Trade, the foreign investment statistics indicate that China is sitting in 9th place with just 2% of the total investment in Australia, whilst Hong Kong is in 5th place with 3.7%. The leading foreign investors in Australia include the US with a whopping 25.6%, followed by the UK sitting at 17.8%. Now, despite China only ranking in 9th place, it does make strategic investments such as the acquisition of the milk processing company Bellamy's, which it did last year, and they continue to buy farmland around Australia. Now, in the past, the Chinese tended to buy a residential and commercial property after the government changed the foreign investment rules over a decade ago, causing our property markets to rise strongly, which presented challenges for Australian families wanting to buy their own home. Now, whilst the Australian government wound back those rules in recent years, resulting in fewer purchases by the Chinese and relieving some of the pressure on the housing market, we still need to be wary as this situation may not last forever. China is our biggest trading partner, and there is no question that they need Australia to help their growth plans. So you have to wonder why they're going down the path they are at present, as they seem to be achieving the opposite of what they actually want. Now, Australians are fed up with the recent attacks from China and are asking our politicians not just to stand firm, but to strengthen laws around Chinese investment in Australia. Now, the Chinese have so far stayed away from implementing tariffs on iron ore, which is a major thing that they need from Australia. And I do not believe this situation will change anytime soon, which means our miners will be safe in the near future. However, investors do need to exercise caution if they own companies that heavily export to China, like Treasury Wines Estates. In fact, now is not the time to cherry-pick stocks that have fallen heavily because of the tariffs in an attempt to grab a bargain, as this is very high risk. So what were the best and worst performing sectors last week on our market? Well, despite the Australian stock market rising, it again experienced a relatively flat week, with information technology being the best sector, and that was up 3.11%, and that was followed by materials up 2.06%, and consumer staples, that was up 1.46%. Now, the worst performing sectors in the Australian market included the industrials, which was down 1.53%, followed by consumer discretionary down 1.19%, and communication services, that was down 0.97%. Looking at the S&P ASX Top 100 stocks, the best performers included Link Administration up 12.18%, followed by Fortescue Metals, that was up 11.35%, and Xero, that was up 6.34%. The worst performers included Pendal Group down 8.19%, followed by Cochlear down 7.12%, and Virgin Money, well, that was down 6.64%. So what do I expect in the market moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me.
Please remember that this report is an educational tool. While Wealth Within holds an Australian financial services licence, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
Oh, a few weeks ago, I did mention that I thought the fast momentum, or that really, really strong momentum we saw through November, would slow in December. And that's really what we've seen the last couple of weeks, as the momentum on our market has pulled off. And we would see that normally from about mid-December through to sort of after Christmas, probably even into almost mid-January, we do see momentum drop as volumes drop. But interestingly, we've seen volumes stay high, but momentum is slow. But let's go and have a look at the chart anyway. On the screen, you've got the weekly chart of the All Ordinaries Index. And what you can see here is the last couple of weeks. So this is November, very, very strong. And you can see here how the last couple of weeks, very small bars, not much movement between the opens and closes. And last week we opened down here, pushed up and came right back to where we started again. And so our market really didn't go anywhere. Technically, it was an up week. We've had a move up from this low here. I was expecting this to be a little bit more deeper, have at least maybe another week down a bit deeper, but it didn't happen. Then we've had 1, 2, 3 weeks up. I would have hoped the second week down here to slow the momentum, but it didn't happen. But it's interesting how momentum is slow here. Now, I've added this little line here. This is my more longer term momentum on the market from that March low, and you can see it's traveling up. So it wouldn't surprise me if the market sort of just started to move over a little bit over the next few weeks, more closer to this grey line, and then started to move up a little bit stronger from there. But I do think more medium to longer term, our market is really, really good. I think it'll be good throughout 2021, but that's another story at the moment. But all I did was just used a trend line tool and just looked at the momentum here out of that March low, and you can see the strength there. And what happens is the market will move up for a period of time, and then momentum slows, and then it moves up for a period of time. And I'll show you the next bit. You can see here, it moves up for a period of time, and then momentum slows. And if I keep moving on, you can see the market does follow that angle quite regularly. It goes up for a few weeks, and then the momentum slows. If I keep moving it over, you'll see it happening through here. Momentum strong, and then it fell over. And if I keep moving it, so the market continues to repeat itself in terms of price and pattern. So it's moved up nicely, and then it slowed a little bit. So we may see a little bit of a jump through here, maybe up another week this week, and then we'll get momentum slowing a little bit through Christmas and New Year. But again, it's one of those things, the market was running, and I think looking at my printed report that I put out, which is on our website, which I put out to media right across Australia, so it gets picked up by mainly Magazine, CanStar, and quite a few other online and print versions. It goes out there every single week that I write for it. And then what you're seeing here is the top part of this report that I do today is really the commentary on that, and then obviously I write what I think of the All Ordinaries Index. But I really do think at the moment the market is looking really, really good for this year. But if you want to really get a bit more detail on what I was talking about, that's in the printed report on our website. So just go there, wealthwithin.com.au, and look for that, and you'll see this video there as well. But what I was saying is November, our market was running at about 44 points per day. So every single day or trading day, it was averaging 44 points of rise. Since then, so that was November. So since the 1st of December, it's been running at 18 points per day. So you can see it's halved its speed, because the market moves up every day or down every day in a certain amount of price. So when we look at that, we can see whether it's a sprinter or a stayer, if it's a long distance marathon runner, or whether it's a short-term sprinter doing 100 metres. And so the market will constantly change momentum, and understanding that it changes momentum allows you to really determine when you're getting in, when you're getting out, and get more consistency with your investing and trading. And it will depend on whether that momentum is long-term or short-term, because the market runs in momentum and volatility. Not even looking at those two things means is why a lot more traders and investors are more inconsistent with their results. Now, there's a lot more to it that I can't get into, because it's about having rules around your buying and selling, but you get the point. But I just want to quickly just show you the top 20 stocks before I move on to the questions for the day. And looking here, if we go to the top 20 stocks here, and looking at those, you can see for the year we've seen some great stocks. Goodman Group up 33%, Coles up 21%, Wesfarmers up 21%, Rio up 15%, BHP up 10%, Woolworths up 8%, CSL up 6%. But it's quite thin in that top 20, isn't it? There's only a couple of big areas here, but looking down here, your banks, Macquarie hasn't done well this year, 0.64, and yet out of the banks, this is generally the best performer of the banks. Combank up 3.26%. for the year, so hasn't done well. Looking at here, we're looking down here, Origin Energy, Insurance, IAG, Woodside, Scentre Group, Suncorp, Westpac, Telstra, all of these I expect to do a lot better into 2021, because when you see big moves there in some of these areas. Now, you don't want to buy these returns because this is last year. Goodman Group rose 33%. It's already done that. So you don't want to try and jump in on now hoping it's going to do that again. And this is a big mistake that retail investors and traders make. You don't want to get into Coles thinking it's going to do another 21% because how long can a stock do that? So just look at these and decide for yourself what areas you might be looking in. But Janine and I are looking at mining or materials. We're looking at energy, and we're looking at financials for the opportunities for the coming year. So that's really what I'm looking at there. And really, we don't go outside these top 100 stocks. So and if you are going outside the top 100 stocks, you are looking to take higher risk with your trading. And I think with COVID at the moment still around, it's going to take a while for us to get out of that. Even with the vaccine, I think we still need to be careful. I'm getting a lot of questions on Whitehaven Coal because it's moved so fast, and we were talking about that 2 months ago. And Fortescue Metals, a lot of people tend to start talking about things after they've already run. But again, I'd be looking at the other end of the scale, which is these ones, which is the ones that haven't performed as well, because you're wanting to get them as they move up into that. But let's get into the questions that we have for this week. Now again, we've received lots of comments and questions, in fact more than we can answer in this video, so I really would like to thank everyone who took the time to post genuine and constructive comments. As you know, I do place a lot more importance on comments and questions that come from subscribers to this channel. Now again, all of the questions I'll be discussing today are from people who subscribe. So if your question hasn't been answered, then I urge you to hit the subscribe button now and ask your question again, and we'll get to that. But the first question we have today is from somebody called Tony, who said, just note on old mate's question RAC. Now, if it has climbed that fast, it can fall even faster on bad news, and even with a stop loss in place, you may not be able to exit, especially with the low volume or that low volume. And you are correct. Let's go and have a quick look at RAC anyway. But he was commenting on an answer I gave last week on a stock called RAC, and you can see here the big movement. So having a stop loss will get you exited. There's a lot of different ways of having a stop loss, and even when you get stocks like this, a lot of people who, how do I say it, aren't as highly educated and experienced on the market will tend to panic and just jump out. And sometimes they jump out too early only for the stock to keep moving up. But it's just about having a set of rules around that. And generally you will always get an exit strategy, whether it's a percentage-based one or a technical-based one. There is always a way to get an exit strategy on a stock. So yes, you are right. Most people, if it starts to fall away quickly, they'll get caught in that. And that's really because I find 9 out of 10 traders and investors don't use stop losses. And that's generally the case, that they haven't got a stop loss, or they don't know where to put it, or they're not confident about where to put it. Because it's always about, oh, geez, if I get out now, I'm going to be losing any upside, and there's always questions that run into people's heads about this sort of thing. So right now, I'm not too worried about it. I'll be setting a good stop loss on that because obviously last week it opened here and it traded down a little bit. It hasn't had a down week yet, but you will generally get a signal on it anyway. But very good comments, and thank you for adding to that. And I thought I'd bring that up because I did think it was a great comment by you. But the next question we got by Shadow Walker. He says, hey Dale, can you look at THC? It's a cannabis company I bought last week at 26 cents, and it's got a strong resistance around the 18-cent mark. It's in a long downtrend on the monthly chart, but it's looking a bit better recently. Holding now for the long term on this stock. Since you love small caps so much, I'd love to hear your thoughts. Thanks. Well, I actually don't love small caps that much. There's very few that I'll actually look at because most small caps are way too illiquid and they don't make profits, etc. I like good stocks that are making profits, so don't think I'm somebody in those micro caps, small caps. I have an interest in a few of them, but I'm not broadly in favour of really small. Those anything under $1, you'd be rarely get my attention. Anything under $1. And I'm serious, I really don't put my attention under that because they are just too illiquid. Now, the reason why probably you're looking at this, and we've had a few questions around cannabis stocks this week, and it's simply because the World Health Organization has basically taken off cannabis off the list. I can't remember the exact terminology, but basically it's not a prohibited drug anymore, basically. And Australia, the US and a few other countries have signed an agreement to be in accordance with what those directives are by the UN Health Organization, I think it's called. But and I do have had a few questions, and people tend to do that jump on these sorts of flavour of the month type stocks hoping to make some money, and most of these cannabis stocks aren't worth investing in. But let's go and have a look at this one. This is THC, and you said you bought in it at 30 cents, and it's you're saying it's got resistance at 18 cents. Well, it doesn't have resistance at 18 cents. It would have support at 18 cents. I'm assuming you've used the wrong word, but it doesn't. It's jumped. See how it's jumped up on the news from the health organisation last week. So it's jumped up on the news, but it's not really showing me a lot of signs of strength. It does have some resistance there around that 28, 30 cents. It'll be interesting to see what happens over the next couple of weeks. But you're right, it's been in a long-term downtrend. And to me, I'd be looking at things of profitability and all sorts of stuff, not just trying to get in on the flavour of the month, because the industry is just not going to change that quickly, even though they have it's decriminalised marijuana, basically. That's really what they've done. So the industry's got to still get through a whole lot of regulatory hoops, etc., in Australia to start growing. So things aren't going to change that fast. So trying to stagger profits, not something that I think is fantastic. You could be right, medium to longer term, it could be a good stock, medium to longer term. But right now, I'm not getting too excited about that stock. But thank you for the great question. The next one we got is from Snap Trex. He says, hi, given that the UN has reclassified cannabis, can you please have a look at some pot stocks such as AC8, CAN or AGH? All have jumped significantly since the announcement. Love the show. Thank you. I'm not going to look at all of those. I only look at one stock for everybody. I have way too many questions from subscribers to answer multiple. We'll look at multiple stocks, but I will look at ACH, which is the first, AC8, which is the first one you looked at, and I just think that looks crap. CRAP. It's not a stock that I would even bother looking at, actually. Let me bring up the weekly chart. It did jump on that news, and you can see there, but it came up. People jumped in and then jumped out and just took their profits. So there's nothing there that says to me that this thing's that exciting. And 5 million shares at 20 cents is not a lot of money on that stock. So high risk. And look at that. That's just a bed of danger. That just it's like a bed of nails. That if you're looking here, if you just multiply that 414,000 by 13 cents. Not a lot of money, very illiquid. Again, it's a CREP stock. And I'm not saying it's not going to go up and it won't make you a gazillion dollars, but the chances of this doing that over the next few weeks, few months is highly unlikely. Again, because as I said, I think this whole area at the moment, because they decriminalised cannabis, doesn't mean these stocks are automatically going to start making a shed load of money and that their business model is going to change hugely and there's going to be a lot of movement that quickly. But again, I wouldn't expect them to do too much this week at all. But again, if you want to take that sort of risk with the stock, then that's absolutely up to you if you want to trade those sorts of stocks. I keep my money away from them because it's just fine. They're just too erratic and harder to trade. It's more guesswork than solid analysis. But let's get into the next question. This one's from Roe Bowen 11. Now, I did shorten the question. It was very, very long and I don't have the time to go through a whole long question. It says, hi, Dale. Thanks for the invaluable advice you've given, and not just to me, but everyone. I'm a beginner trader. Every time I save $500, I research where I'm going to spend it, and I buy shares. Now, I followed the advice to spread it across the sectors. And currently hold shares in 14 different stocks so far. So what he's saying, he actually followed my advice and invested in different sectors and put it across 14 stocks, and neither of those two are actually correct. I don't sector invest. I never have done it, never will do it because I don't think it's right. And that's one thing I actually actively say people shouldn't do is sector invest. So I don't spread it that way. And I also don't talk to people about buying 14 stocks. If you've read my book, the maximum I tell you is 12 stocks. So I'd suggest you probably haven't read my book, so go and buy that. It's your money. It's called Accelerate Your Wealth. It's your money or choice. That's my latest book, which is this blue one. You can get that on my website. It's like $30 and we'll send it out to you. That's the latest one I've got. But if you want to get the free one, you just pay shipping on their homepage. So please do not go to the bookstore in our website. Just on the homepage, right up the top on the left, you'll see a link that says get the book for free, just pay shipping for, I don't know, what, $9 for shipping, whatever it is. It'll tell you exactly how I think about how you should be building your portfolio. But again, it'll change what you're doing. But he says he's got 14 different stocks so far. But my question, can you hold too many stocks as a beginner? Absolutely. You're already holding too many stocks as a beginner. And he says, is it best to consolidate and only keep one or two from each sector? And can you please review AGG? My only falling stock. It looks bearish and I don't see it bottoming out anytime soon. I wish I could tell you why I bought this one, but I really can't. Well, that tells you need to understand why you're buying and when you're selling. But again, don't keep two from every sector. Again, you don't need to do that. Forget sector investing altogether because it's not smart. Sector investing is about buying. It basically, the industry push it because they say, well, some are going to go up, some are going to go down, and some are going to go sideways. So the ones going up will cancel out the ones going down and you make an average return. But I say to them, well, get rid of the ones that are going down and you'll get a better returns just by getting rid of those ones. So don't just think I'll keep one or two from each sector. So get yourself a bit more concentrated, but learn what you're doing. And if you've bought a stock and you don't know why you've bought it, then you need to really understand why you're buying and selling and have rules around all that. So, and yes, you are a beginner, and I do encourage you to learn a hell of a lot more. All right, so the next question we got from Franco. He says, "Hi Dale, could you kindly let us know what is going on with AGL? It's been on a downward projection for a year now. How to invest in that?" Well, it's easy, just have some rules around it, but let's go and have a look because stocks will go down, they'll go up, and that's really what it's about, and that's how the market works. All you do is sit back and wait, and this is where great stock like this, as I said earlier, I do like energy for the moving forward, and AGL is great because good stocks do become too cheap because they are making money. This stock makes money and it has been unloved for quite a long time, and you can see it's starting to get a bit more support here. We're seeing it move up over the last few weeks there. Just put some entry rules around it. It's gone up 1, 2, 3, 4 weeks here, down for a couple. But if this starts to move up through this sort of $14, $15 mark, this could be on a nice longer term uptrend. But again, just using things like trend lines that I talk about in my book will help you get into this stock, and other rules that we have in our Trading Mentor course, which is a great Christmas present for yourself. I think it's like just under $2,000, and I answer all your questions and we help you and get into the market and learn how to buy and sell and trade, but not too hard. But just keep your eye on it. It's about being patient. Even just because you've got some money to put into a stock doesn't mean you need to put it in today. You wait for the best stocks, and the best investors and the best traders stalk the market. Don't just put all their money in. They wait for the good buys to happen because they lower the risk and increase their return, and that's really what you need to do. The next question I've got is from Elvis. So thanks, Elvis, for sending your question in. He says, "Hi Dale and Janine, please analyse IFT. We bought in at $5.52 and due to a takeover bid by Australian Super, now $6.89, and our exit strategy was to take profit at 25%, now at 24.82%. Watch your thoughts. Hang in there or get out. I really got your first book, and I believe Santa will be getting the second book to me this Christmas. Good health, Elvis." Thanks, Elvis. Really enjoy your question. I don't set profit stops, especially on good stocks. You just don't do that, and so I'm not sure why you set it at 25% because you thought, well, that's a great place. But let's go and have a look at the chart. I think there's an old rule in trading is let profits run, cut losses short, which is what you should be doing. It's run really, really hard through here. I wouldn't be surprised if the momentum starts to die off a little bit on here. And it folds back after this massive move last week. So, but again, just set some rules around it. If I just put a trend line on this, which I teach in my book, which you know, just draw that up through there and you'll probably find it's going to come back somewhat to that. And then if it does find some support, if it's got good fundamentals around it, you might find it lasts a lot longer and you might get 50% or 100%. But right now, again, set a stop loss on it. Watch your exit strategy here if it falls away. Never worry about upside. And this is the point I'm saying is why would you set a 25% exit profit stop when it could go 50, 100, whatever percent? Never worry about the upside because that's when you've got the free money, and it's the downside you need to be worried about it and making sure you set a level to exit, not in terms of downward moves rather than upward moves. Let your profits run, cut your losses short. Now, I think the last question we've got is from Captain Oblivious. What a great name. He says, "Hey Dale, if you could analyse MYS, I currently hold it with a buy price of $3.68. So let's go and have a look at MYS. I'm covering a few more today than I normally do because this is the last recording for the year, but looking at MYS, another very, very small stock, a lot of small stocks today other than AGL, and I'm not sure why everybody's excited about all these small stocks. I can see them, they've jumped during November obviously, and that's possibly why people are, and obviously I understand why people are talking about cannabis stocks, but you don't, it really, It's just taking a breather at the moment. I would expect it doesn't look too bad actually. I do like it. It is not necessarily a highly liquid stock, but it's not too bad. You can see there 745,000 shares, 685,333. So it's not a big stock. So it's not one that's on my radar. It is more illiquid, and it's not moving for me. Come on, you can do that. Get down to there. You can see here how it's a lot more liquid there on the daily chart. You can see, like, 85,000 shares in a day. So 85,000 times $4.53 is not a lot of money, but it is looking a little weak. It's run a bit too hard. So again, I think, like I was talking about earlier, the momentum will slow, and I think it will slow on this one. But again, just have an exit strategy if you are in the stock. Any downside move, make sure you've got a line in the sand that you're saying, okay, this is the point I want to get out, but don't just buy and hope, if that makes sense. Because I find a lot of people buying, what they do, buy a stock and pray it goes up, and then when it goes down, they don't know what to do. And yet the most important thing you need to understand is how to get out, because you'll make far more money. It's not about how to get into a stock that makes you the money. It's getting out at the right times that makes you more money. But thanks for sending in your questions. I really do appreciate it. And in order to... Sorry, as I said just a minute ago, I needed to let you know this is my last video for the year, as we are taking 3 weeks off, or Janine and I are taking 3 weeks off. However, we do have something really special for you whilst we are on the break, and that's Janine and I. We have recorded our analysis, or we are recording that today, our analysis of the Australian sectors in a lot more detail than I talk about in these reports, and that we normally do with our recordings, even on our live show. So we're going to be going through our analysis of the sectors and showing you what we think is happening in the next year. We're also going to go through the top 20 stocks in the Australian market as well over those 3 weeks as well. So we're going to do 10 one week, 10 the next week. So look out for these over the next 3 weeks for the coming year. And we'll actually put some questions in there as well, which, and then I answering some questions. But if you do have any questions that you'd like me to answer, just stick them below, and in the new year we'll get to answering all those questions. But remember, you do need to hit the subscribe button, otherwise you're highly unlikely for your question to be answered. So you do really need to hit that subscribe button. Now remember, here we do these reports on this channel. We do them every single Monday, or our market reports, and so also we do our weekly live stream. So the last one for the year is on tomorrow night, Tuesday, and we do them every Tuesday night, 7 to 8 p.m. Australian Eastern Time. So remember, hit the subscribe button now, click the bell on the right of it so you know when we upload our videos and we go live. Now, on behalf of the hard-working and dedicated team here at Wealth Within, who really do help put these recordings together, and indeed all of our team, we do wish you a safe and Merry Christmas. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.